Did you know that you can invest in two different investments that both give you an 8% average annual return, but one of them means you get $3 million less money at the end of 22 years? Hey guys, I'm Arianne and I retired with investment income at the age of 27. Now I co-own over 2,400 rental properties with partner investors, and I made this channel so good people like you can learn the truth about money so you can have financial freedom for you and your family as well. So today we're going to talk about stocks versus real estate returns, but it's not really stocks versus real estate. Look, I own stocks too. I own crypto too. I'm not like trying to bash stocks. I think there's something good about them. But what I'm trying to show you is that you need to be informed about all the decisions you're making. And sometimes when we look at investment calculators and average annual return, we don't know the truth behind it and what it actually means for our money. So today I'm going to show you the difference between what you can make in something that is stable, that gives you a stable return, which typically real estate investment is something stable, and something that gives you a volatile return that goes up and down. Like right now, you guys probably, if you have money in the stock market like me or money in crypto like me, you are down 30% in stocks and 60% in crypto. It hurts, but I have some real estate investments too, and I'm glad that I have those. I have different buckets for my different investments. So I'm not like anti-stocks or anti-crypto again, but I just want you to see these numbers so you can make your own decisions and you can allocate to different investment buckets based on what you actually want your money to do. So first we're going to talk about an annual average rate of return, which is usually what you guys base and what I used to base my investment returns from, right? Like if we look at this compounding interest calculator, most of us, this is how we project how we're going to grow our net worth and how we're going to get to financial freedom. If you enter all of these numbers here, usually you're assuming that this estimated interest rate is your average annual rate of return. And then so you're like, oh, I'm going to put 100K initially and then $1,000 a year. And in 22 years, I'm going to have $1.2 million. That's great. That's all I need to live a happy life and not have to worry about money. But as we're going to learn in this video, that's actually not true if you're investing in something that has a volatile return, goes up and down like the stock market or crypto. So look at this slide, right? We got Joe and Alex. Joe invests in a volatile return, medium risk, medium reward, and Alex invests in a low risk, low reward, stable return. Both of them have a 7% average annual rate of return. But the money at the end of year 3 is different. Both of them start with $100,000. Joe, who invests in a volatile stock market, year 1, they got a bad year, negative 30%. Year 2, we got a great year, positive 30%. And then year 3, we got another good year, positive 21%. So if you divide negative 30, positive 21 divided by 3, you get a 7% average annual return. Now, Alex on the right side invests in a very stable return, something in real estate. There's a lot of different types. Watch my other videos to see what all the passive options are, and there's some active options too. But Alex invests in something that gets her 7% a year. So it's very, it's not sexy, right? Alex didn't get a 30% return or a 21% return. They just got a stable 777. So 777 divided by 3 is a 7% annual return. But if you look at year 3, Joe with the sexy investment has $110,000. And Alex, with a boring, stable investment, has $122,000. Alex has $12,000 more than Joe. But they both had the same average annual return of 7%. Very interesting, right? This is like a simplistic example that I'm trying to show you how this happens. But if you look at real returns, so this whole table is the NASDAQ chart for 2000 to 2022. This is the actual performance of the NASDAQ index in the stock market. It assumes that someone put a starting balance of $1 million in 2000 And then it follows along what happened throughout those years until 2022 today. So on the left side, we have, let's just say this is Joe again, right? Joe on the left side invests $1 million in the stock market. That's a volatile return. It's in the NASDAQ. And then on the right, we have Alex again, who invests in something super stable at 7.93. Let's just say 8%, so it's easy to say it. So they both got an average 8% annual return in the stock market and versus this stable real estate investment. And look, at the end of those 22 years, on the left side, Joe has $2.7 million. And on the right side, Alex has $5.7 million. Alex, on the right side, has $3 million more than Joe. And they both got this 8% average annual return. That's crazy, right? Because Joe on the left side didn't know that this was what was going to happen to his money. He thought he was gonna have $5.7 million like Alex, because that's what this compounding interest rate calculator would say if they put the average annual rate of the stock market or the NASDAQ that they were gonna project. But look, reality is different. And it's all because of this math right here that we're showing. So guys, I need you. I know this is a lot for some people who don't like spreadsheets. I love spreadsheets. Please rewind, pause, rewind, like look at this over and over again so it sticks, because I don't want you to not have that extra $3 million. Please educate yourself. I got a lot of videos on this channel on how you can get stable returns. And again, I'm not knocking the stock market or crypto. I have stocks and I have crypto, right? Like I think there's a place for them in different buckets in your investing portfolio. But if you want financial freedom and if you want more money for you and your family, you have to understand all the different buckets and where they play a part in your investment portfolio. I do not want you or your mom or your dad or your children to have $3 million less money than you deserve, because you worked super hard for that and you delayed gratification. You left it in the investment market, and every time the market goes down like now, you're like, don't look at it, just wait, it's gonna go back up, right? I don't want you to be screwed, right? Because unfortunately, if you don't learn this and if you don't realize this, if you were just like Joe on the left side, you're going to have $3 million less than someone who did learn it and who learned how they can invest in stable investments too, on top of volatile investments. So please, please, please learn this for yourself. Share this with your family, your friends. They deserve to know this. It sucks that nobody really talks about this, but if you think about it, they don't have an incentive to talk about this, because most of the financial world, all the ads you see, all of the financial markets, they're not designed to help you become financially free. They're designed to make money for themselves. But I want you to have the freedom that you deserve. So please, 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 please spend some time learning this. Share this with your family, your friends, and learn how you can get stable returns. Real estate is a great place to find stable returns. There's so many ways. I'm going to put some videos up here in the playlist, and I'm going to put some more videos down in the description for you to watch and see how you can get these stable returns. It doesn't have to be active. Some people think, oh, I don't want to deal with tenants and toilets. You don't have to do that. You can actually just invest passively. And the only thing you have to do is figure out who you're gonna know, like, and trust to invest your money with, and they do all the work. You just send them the money. And you can even do that with as low as $1,000. The better investments are going to be $50,000 to $75,000 minimum. But again, we don't have time to talk about that in this video. But check out those other videos in the description and up here on the playlist. All right, guys. Hopefully you learned something out of this. I know I did when I first saw this table. We have so many resources for you down below in the description. Check that out. If you're on Instagram or TikTok, add me. I post investing tips daily. We also have a free Facebook group so you can interact with other members of our community. It's called Faster Financial Freedom. Check that out in the description below. And as always, if you like this, please click that like button and then share it with someone that you think it can help. Click that subscribe button and the notification bell so you can be the first one to see my new videos. All right, guys, thank you so much for sticking with me to the end. Have an amazing day, and I will see you next time.